Hi, my name is Ram Dhamija. Welcome to my channel. I'm a full-time derivatives trader and an investor. I've been full-time in the markets for the last 5 years. And today I'm here to discuss how the year went by and how I see things moving ahead into the next year. So no charts, no data per se, but just what I think based on my experience and the way I see the markets. Uh, so it has been a good year for trading, I would say, and a good year. I would say a good year for trading and a decent year for investment as well. Though what has happened after October was we have seen a very sharp fall in the markets, but in spite of that, the markets are going to close with some gains for the year, which is good. So I would not call it a bad year. And coming on the back of such a ferocious bull market, which started in March 2023, I think the year has been good. The markets have been kind to us. And not only that, there were a lot of changes that happened in the market this year. Primary one was a lot of uncertainty with regards to your FNO. So there were a lot of rule changes, a lot of margin changes, etc. A lot of geopolitical uncertainty. We went through two elections, one in India, one in US, and a lot of whole host of other factors which contributed to the market turmoil. But having said that, still we ended up well, and I think I'm happy with my performance for the year. So in terms of the percentages, I will talk mostly in percentages over here. There is no need for absolute numbers. So in terms of percentages, it has been a good year, as I have said. On an average, I have been able to generate about 2% plus for the entire year. So ending the year close to about 27 odd percent for my options book. And the thing is that there was a lot of fluctuations. So till September, the going was very good, and come October, there was a huge drawdown that I faced in the options book. And I have connected with a lot of traders, and October was especially a very rough month. And at that point in time, we did not know why the options were behaving the way they were behaving. But later on, we realized that it was because of the market fall that immediately came in. And sometimes you don't understand what is happening. Now, one can argue that the market fall also happened in February of this year, but the options were very well behaved. I don't know how to read that, but in October, certainly the way markets were behaving was signaling that there is something which is not right with our markets, and we could be entering into a bear phase. And a lot of times it happens, then when the markets are about to correct, then the VIX rises. February perhaps was an exception. And maybe my hypothesis is that the way we have recovered in March, February could have been some sort of a bottom that we might have made. And that is why the options volatility was not so high in February. But in October, it was very, very high. There was a lot of uncertainty. There was a lot of froth in the markets, especially in the small and mid cap area. So all that got cleaned out, and along with that, the option sellers also got cleaned out, I would say. I've seen a lot of people who had a drawdown of 15-20% for October. So another thing with respect to my systems is that I do not let drawdown go more than max drawdown is 5% for me, and I try to keep it at 2 to 3% at max. Now, also, what happens is that these are the times which help you become a better trader as well. So October was all about. In fact, I was piling on a lot of risk until September, but October made me realize that when you are scaling up the positions, and something as unexpected as the October drawdown hits you, then your system should not collapse. So I reworked on my systems and I made it even stronger. Now my hedges are even more robust, and the number of instruments that I'm trading are much higher. So that has ensured that come another October, it should be able to handle that much more easily than the last October. So that is the changes. So you have to continuously keep on ensuring that your systems are more robust and stronger, and keep on working towards them. Keep on doing back testing. Keep on seeing what is the max drawdown that your system is giving you versus the kind of returns. Now, returns will also change going ahead into next year. We just don't know whether the returns that we have been seeing will hold or not. Definitely, there has been a reduction in terms of returns just because of the extra margin that is requirements that have come in and so on. So that problem will remain. Having said that, we have to ensure that our systems are made in such a way that in spite of all these changes, we end up doing good. In terms of the portfolio has performed well. It has performed in line with the markets, and slightly better actually. And I would count that as a very good achievement because my portfolio has also got a lot of debt in it. So debt plus equity combined is giving more than the market returns is good. Now one might argue that this year equity returns were less than debt. That all is fine, but having said that, I maintain a certain ratio to my debt, which I'm very happy about. I maintain a certain ratio of gold, which I'm very happy about. The gold has superbly outperformed this year, and anyone who had gold in their portfolios will be very happy. International markets performed really outperformed this year in terms of S&P and Nasdaq. Again, one more area where one should diversify and have some exposure there as well. So having said that, these 2-3 things helped me get a collateral return on the portfolio, which was slightly higher than the market return. I'm talking about Nifty 50 over here. So that is one good thing. And the derivatives return I have already mentioned what they have been. So going ahead into next year, how I foresee what we are entering into. First and foremost, there are two things that can play out in the market. One is, then this is just purely my opinion. Please don't go by it. Please don't make your buy sell decisions based on this. Please consult a financial advisor. The disclaimers that are there. The whole idea of this is to share my knowledge and share what I think. It's not a buy or sell recommendation by any stretch of imagination. Now, how do I feel that the markets can behave going ahead into next year? There are 2 or 3 things that can happen. One is that we have already seen a bottom. That could be one thing, and we might see some sort of a time correction. Now, if that scenario plays out, then that will be the exact same scenario that played out in September 21 peak to March 23 bottom. The bottom was actually made in June 22, but from June 22 to March 23, there was a huge time correction. Either we can be in for that kind of a thing, where in February 25 is when we have made the bottom, and from Feb 25 to, let's say, maybe October, November, December, I don't know, we go through a time correction. Or it could be that we might fall further. That could be another scenario that can play out. I don't know whether we'll be able to see new highs very soon. I don't think so. We might be able to clear 26,000 in a hurry, just simply because the other things that are happening around the globe are not so pretty in terms of be it the prices of gold that you see, or be it the kind of geopolitical uncertainty that we see, be it the kind of trade wars that we see. So I don't foresee, and also most important, the kind of earnings that our companies are showing doesn't give me the confidence that we might be able to scale new highs immediately in a hurry, like in the next 2 months. I don't think so that's going to happen. Also, if you look at the previous example of June 22 to March 23, there were a lot of times when Nifty tried to, kind of go above the previous highs, but it was not able to clear that. And then in March 23, there was absolutely a mood of pessimism all around. Having said that, I still feel small and mid caps are very highly valued. That is my personal opinion. So even if Nifty stays here or moves in a band, I am not so sure about the returns from small and mid caps. Simply because the returns have been very high for the last couple of years, and it has to mean revert. So either they just go through a grind and the earnings go up and the valuations come down and then we rally, or we might see some sort of a more price correction and then form some sort of a base and then we rally. So that will be my 2 cents on the markets going ahead into next year. But otherwise, in terms of the brutal fall, I don't think that we, especially in large caps, I don't think that we probably are too overvalued to see a very large fall unless something changes drastically. Like there is a geopolitical situation that comes up, or gold, so something happens to gold physical deliveries or something like that, which we just can't anticipate. If something like that happens, then yes, but otherwise I don't foresee any problem per se for a market crash from here. Now coming to the next important thing, which is gold. How is gold going to behave? Now gold has been steadily going up for the last few years. I think since last 3-4 years it has been going up steadily, and every rise has been met by some sort of disbelief that people say that, oh, gold is not a great investment. But if they look at the returns, gold actually ends up giving you the similar amount of returns as your indices have over the last 10-15 years. Primarily because of two things. One, gold is going up in USD, and B, INR depreciates in respect to USD. So gold actually acts as a very, very good hedge for your equity investments, for your international currency investments, and so on. So gold, in my opinion, should be a part of anyone's portfolio. It is my part of my portfolio for sure. And I look forward to, whenever gold declines, I try to see if I can add it a little bit more. Sovereign gold bonds was a great instrument, but that has unfortunately been stopped. So no new issuances are there. One can still go and buy it from the secondary markets. But there are other gold instruments that one can look at. There's gold ETFs, gold Bs, there is gold mutual funds, and so on and so forth. And that just reminds me, if anyone is interested in building up their mutual fund portfolio, they can contact me. My they can fill the Google form. My details are there. And once you fill that form, I will get in touch with you, and then we will discuss your requirements, and we will build a very solid mutual fund portfolio for you. That is my hobby and also profession. I am a NISM certified mutual fund distributor, AMFI registered, and I help clients make their mutual fund portfolio. My basic belief is that safety of capital comes first, and then the returns will follow. So we build a very well diversified mutual fund portfolio, which helps you meet your goals, aims, aspirations, etc., and which also doesn't let you miss out on market up moves. So which is also very critical. Safety with returns. So in case anyone is interested, please do fill up the form, and I shall then call you at a mutually convenient time, and we will discuss your requirements, and I can help you in terms of construction of a mutual fund portfolio. Coming back to gold, as I said, gold is a very important thing, very important instrument, very important asset class to have in your portfolio. Percentage, again, I have said this before, varies a lot. I usually try to keep it between 10 to 15, but there are studies which show 35% also allocation to gold is considered to be good, but I'm not so sure, because there are 8-10 years when gold will not perform, like 2010 to 2020 or 2012 to 2020 specifically. Gold did not do anything, gold did not do much. So if you're stuck in those times, then gold appears to be the most useless instrument. But having said that, from 2020, if you see the kind of movement gold has done, it has actually given a beautiful CAGR. So one can limit their exposure to gold between 10 to 15 is what I think should be right. Now coming to the next important asset class, which is USD. USD equities and USD denominated securities. Now, unfortunately, the mutual funds right now are not accepting USD investments in USD. So that is a big constraint that we're going to foresee this year. Now, let's hope that those limits are removed and we can start again, investing in them. But US markets probably look like they are in for a correction, and if that happens, there is going to be a good case for buying US equities as well. So we will keep an eye on that. As soon as the one is able to invest in US denominated mutual funds, then we can start doing that. The ETFs are still trading at a premium to their fair value, so I would not recommend anyone to go and buy those. Now coming ahead into how I see the sectors going ahead into next year. See, typically what happens is that when a new bull market takes shape, then the leaders of the previous bull market usually never outperform. We have seen that time and again. Like 2007-8, it was infra and PSU which were doing well. Then 2016, there was banking, pharma, etc. that were doing well at that 2017. Sorry. Then 2020, the same FMCG, etc. were doing very well. But after that, these bull markets, if you see what happened after 2007, infra companies, PSU companies completely collapsed. They did not rally for another 10 years. 2017, after banking and pharma, they collapsed for another 5 years. Pharma did rally in 2020, but banking has not. Then in 2020, FMCG, if you see from 2020 to 2025, they have not rallied. So 2024 rally was all about PSU, defense, infra, railways, etc. Now that bull run is over. Now I don't know whether they are going to be the next. It's highly unlikely, in my opinion, that those sectors are going to outperform. But in my opinion, what is going to outperform perhaps could be the way financials are moving, because they are highly undervalued and looks like a very good sector to with high quality companies. So I would bet somewhat on financials, and of course then capital markets has also rallied a lot. So they were also leaders of the last bull run, but the way capital markets have progressed, maybe that might also be another interesting area. FMCG has corrected a lot, so I don't know whether that will take on the mantle of the next leaders. So it's very difficult to predict, but one can definitely take some cues that some sectors which have not really performed for some years, financials is top of that. And we are already seeing that in this particular bear market, financials corrected the least. In fact, Fin Nifty right now has almost reached its 52-week high, whereas Nifty is still minus 10%. So that basically goes on to show that which asset class has got, which sector has got more strength in it. Coming to the last point, how one should play going ahead into next year, and how one should plan. I believe that asset allocation is the most important thing. It's a very, very dynamic world that we are living in. If you think that what is going to happen into next year by the dot, it's very, very difficult. Very few people are able to predict that. Even if they do, they are right maybe 50% of the time. So hedge your bets. Hedge your bets across various assets, across equities, gold, fixed income, debt, international, and so on, and keep certain weightages for that. So asset allocation, if you maintain and if you invest through ETFs, through mutual funds, then the chances are that you will be able to generate very good returns for yourself and compound your wealth over a long period of time. So two things are very critical. One is staying in the game, be it trading or investing, and that is where your things like risk management and asset allocation, etc., comes in. So if you are able to do that and plan properly, backtest everything, then there is a very strong chance that you will be able to generate very good wealth. However, if you go by impulse, if you go by tips, if you go by what the other people are doing, the chances are less in terms of making sustainable wealth. So having said that, please do share in the comment sections how your year went, what have been your learnings from this year, how do you plan for going ahead into next year, and I shall see you soon with another update, and I hope that each one of you, especially the ones who listen to me regularly and are followers of this channel, uh, have a very good year. And if there is any help that's required for any one of them, especially the ones who continuously write, comment, I have a list of those people who do that. So if they want any help, I'll be more than happy to help them. And I shall see you soon, and have a good day, good week, good year ahead, and all the best. Thank you so much. Take care. Bye bye.